Welcome you to another edition of Business Insight. I am Olaoluwa Awe. Today, our conversation on the capital market continues with Professor Adori. Corporate actions and shareholders' rights are today's focus. But first, let's kick things off by bringing you up to speed with the most recent updates in companies and the prevailing markets. Welcome to the business news on Business Insights. Once again, I am Olaoluwa Awe. Now, Nigeria, the largest economy in Africa, is gearing up to tap into the booming global lithium market, which is valued by predictions at $22.2 billion in 2023 and $89.9 billion in 2030. Souq Explorations Limited recently announced promising results from its lithium exploration efforts in Oyo State, Nigeria, after discovering substantial mineralized pegmatites during drilling. Notably, the Oyo State project area within this land holdings is believed by Souq to contain the most significant occurrence of lithium-rich pegmatites in Nigeria, encompassing the lithium project areas of Oyo State, Kwara State, and Ekiti State. President and CEO Souq Explorations Limited Segun Lawson expressed excitement about their progress. The Oyo State lithium project spans approximately 38 square kilometers and is positioned near the western border of Nigeria, lying within a 200-kilometer distance from Lagos, the commercial hub of the nation. And away from that, Bureau de Change operators in Nigeria have aligned with the acting governor of the Central Bank of Nigeria, CBN, Folashodun Shonubi, who stated that a significant portion of international money transfers by international money transfer operators, IMTOs, is being diverted and goes untracked. This diversion was linked to the weakening of the naira against the dollar and issues in managing the foreign exchange market. Shonubi emphasized that many diaspora remittances enter Nigeria in dollars and remain unrecorded officially, often ending up in the parallel market. The president of the Association of Bureau de Change Operators of Nigeria, APCON, Aminu Gwadebe, acknowledged that some BDCs participate in these activities, but confirmed the changes introduced by the CBN, especially in the reporting format, to ensure transparency and accountability among licensed BDCs. Gwadebe further noted that fintech platforms, including those operating beyond Nigeria's jurisdiction, are also involved in diverting diaspora remittances, citing the lack of standardized regulations and high speculative rates on these platforms, which often exceed those of the parallel market. He suggested that the government should implement stricter measures against market players engaged in such practices and create an enabling environment for licensed BDCs to compete and evolve beyond the traditional cash model. And away from that, Nigeria's currency has reached 64.9 trillion naira in July 2023, as reported by the Central Bank of Nigeria, CBN. This marked a 0.93% increase or 600 billion naira increase from the 64.3 trillion naira recorded in the previous month. However, this growth was smaller than the 8.8 trillion naira increase observed in June compared to May, when money supply was 55.5 trillion naira. The money supply includes components like quasi money, bank deposits, and currency outside of banks. Quasi money, which is convertible to cash, rose to 40.76 trillion naira from 39.86 trillion naira the previous month. Demand deposits and bank deposits decreased from 22.23 trillion naira to 21.94 trillion naira, while currency outside of banks decreased to 2.20 trillion naira from 2.26 trillion naira. Also, naira money, which is physical cash, decreased from 24.49 trillion naira to 24.15 trillion naira. Currency in circulation also slightly decreased from 2.60 trillion naira in June to 2.59 trillion naira in July. Additionally, the reserve money used by CBN and financial institutions for various obligations decreased from 17.71 trillion naira to 17.37 trillion naira. During the same period, credit extended to the government increased from 31.23 trillion naira to 32.3 trillion naira. Business owners must remember that increase in money supply might indicate that there is more money circulating in the economy, potentially leading to increased credit availability for businesses and vice versa. But also remember that if this increase in money in circulation is not matched by increase in the production of goods and services, more money in circulation can potentially lead to inflation, which can increase the cost of production and reduce the purchasing power of consumers. So businesses might need to closely monitor economic indicators like money supply, inflation rates, interest rates, and government policies to make informed decisions. And moving on, a United Nations Environment Programme study has revealed that Africa's marine and coastal tourism sector could generate over $100 billion in revenue by 2030. With its diverse eco-tourism prospect, this sector not only promises economic growth but also sustainable development. The blue economy, driven by Africa's vast coastline, brought in $296 billion and 49 million jobs in 2018, projected to rise to $576 billion and 127 million jobs by 2063. Marine and coastal tourism, worth $80 billion, has potential for $100 billion in revenue and 28 million jobs by 2030. Despite potential challenges like illegal fishing, which causes a yearly $10 billion loss, policymakers and businesses are urged to adopt holistic approaches, promoting collaboration, innovation, and partnerships. Coastal tourism activities such as swimming and maritime activities like yachting further contribute to this sector's growth. Moving on, a recent analysis of financial reports from state-owned oil and gas companies across Africa has revealed collective earnings of $27.95 billion so far in 2023. This rise in earnings can be attributed to the increase in crude oil prices. Notably, Nigeria's state oil company is excluded from this analysis as it hasn't yet disclosed its earnings. Specifically, Souq of Algeria recorded $21 billion from January to May 2023, and for the first 6 months of the year, the National Oil Corporation of Libya recorded $6.9 billion, and Sonangol of Angola recorded earnings of $3.4 million. However, Libya's crude oil revenues decreased to $6.95 billion in the first half of the year, while Angola's oil revenue declined by 2 billion kwanzas, about $2.4 million, compared to the same period in 2022, with the government collecting 2.8 billion kwanzas, approximately $3.4 million. The CEO of Souq, Taufik Haka, mentioned that their oil and gas earnings for the initial 5 months of 2023 had grown by 2% compared to the same period in the previous year, emphasizing the need for more visibility from European firms to increase Algeria's gas exports. Away from Africa, in a bid to gain approval from the United Kingdom's antitrust regulator for its $69 billion sale to Microsoft, Activision Blizzard, the maker of Call of Duty, will transfer its streaming rights to Ubisoft Entertainment. Microsoft's attempt to acquire Activision Blizzard, which was hailed as the largest gaming deal in history, was blocked by the UK's competition regulator due to concerns about Microsoft's potential dominance in the emerging cloud gaming sector. After extensive negotiations, the Competition and Markets Authority, CMA, confirmed its initial decision to reject the deal, and the new agreement stipulates that Microsoft cannot exclusively release Activision games such as Overwatch and Diablo on its Xbox cloud gaming service, or maintain sole control over licensing terms for competing services. Instead, French gaming company Ubisoft will acquire the cloud streaming rights for existing Activision PC and console games, as well as any forthcoming titles from Activision over the next 15 years. This arrangement will apply globally, except in Europe, where the original deal was already approved by Brussels. And it's time to bring you updates from the capital, commodities and currency markets. Stay tuned. And welcome to Market Trends. We move now to the market. At the end of yesterday's trading at the Nigerian Stock Exchange, a substantial activity unfolded. More than 293.4 million shares were exchanged across 5,895 transactions, amounting to a market value of over 4 billion naira. This data, when compared to the previous NGX trading day, reveals remarkable improvement: a 27% surge in trading volume, a 3% increase in turnover, and a 7% rise in the number of deals conducted. Currently, the total market capitalization of the Nigerian Stock Exchange stands at 35.7 trillion naira. The trading landscape included 115 Nigerian Stock Exchange listed equities with both gains and losses. Noteworthy gainers included Cornerstone Insurance Company, leading the pack with a commendable 9.84% surge in share price, reaching 1.34 naira per share. Other notable gainers were Computer Warehouse Group with 9.74% gain, Square Nigeria with 9.37% gain, and Associated Boss Company with 8.33% gain. Conversely, Nigeria Breweries faced a challenging day, witnessing a 10% decline in share price to 38.25 naira per share. Following this, Chelarams also witnessed a 10% loss. Sunu Assurances Nigeria witnessed a 10% decline, and John Holt an 8.81% decline. When it came to trading volume, Transcorp Nigeria maintained the lead with 41.4 million shares traded, followed by Access Holdings 36.2 million, Fidelity Bank 32.1 million, and Omatech Ventures 15 million. Now, these numbers collectively paint a vivid picture of the day's market dynamics on the Nigerian Stock Exchange. Now, what is trading session like on the Johannesburg Stock Exchange for August 22, 2023? Well, a substantial market activity unfolded. A total of 280.6 million shares exchanged hands through 350,248 deals, equivalent to a market value of above 20 billion rand. A comparison with the previous JSE trading day highlights significant shift: a 15% rise in trading volume, a 2% decrease in turnover, and an 11% upswing in deal count. Currently, the Johannesburg Stock Exchange boasts a market capitalization of 19.1 trillion rand, and the trading arena encompassed a total of 357 JSE listed equities, generating both gains and losses. Notably, Delta Property Fund took the lead among the gainers, exhibiting an impressive 22.22% appreciation in share price, culminating at 0.11 rand per share. This was followed by Deneb Investment, 12.82% boost, Sab Zenzel Kabili, 12.78% boost, and Brimstone Investment Core, 12.2% boost. However, on the downside, AO Technology Solutions faced challenges, witnessing a notable 22.31% decline in share price to 1.01 rand per share. Following this were Cefaco Holdings, 21.05% decline, Southern Palladium, 17.72% decline, as well as Steinhoff International Holdings, 16.67% decline. Now, the trading volume spotlighted First Rand with 19.7 million shares exchanged, followed by Redefined Properties 14.8 million, Old Mutual 14.6 million, and Kibo Energy 13 million. These figures cumulatively provide a comprehensive snapshot of the dynamic trading activity at the Johannesburg Stock Exchange. And that's the capital market summary for now. We move now to the commodity markets. In this market, several key trends have emerged. Notably, wheat has garnered attention with a current valuation of 596 US cents. Gold stands out prominently with a value of $1,896.30 US dollars. Silver follows suit at $23.38, while copper trails slightly behind at $3.75. Shifting our focus to the energy sector now, Brent crude oil has solidified its presence in the market with a rate of $84.02 per barrel. Now, let's promptly delve into the latest currency exchange rates. The US dollar is currently officially priced at 755.27 naira for buying and 756.27 naira for selling, whereas British pound stands at 961.53 naira for buying and 962.8 naira for selling. As for the euro, the official exchange rate in Nigeria sits at 818.93 naira for buying and 820.02 naira for selling. And that's the market trend for now on Business Insights. I am Olaoluwawe. Coming up next, our conversation on the basics of the capital market. This time I discuss corporate actions and shareholders' rights. Don't miss it. Today on Business Insight, we'll be talking about shareholders' rights and corporate actions in the capital market. My name is Olaoluwa Awe, and doing this with me is our in-house business analyst, Ahmed Jayola. Good morning, Ahmed Jayola.
Good morning, Olaoluwa.
Yes, I'm good. Yes, Professor David Adori, the capital market expert, will also be joining on via Zoom, and will be taking a good number of questions also. You know, people have faced challenges trading in the capital market in Nigeria and all around the world, and it is very important that we engage an expert to address some of these issues. Some people see it as a very risky, line of business. Some people will tell you, oh, I've pumped this amount of money into the stock market and I haven't gained one. Some people have even been discouraged that they have abandoned their investment, and today is the day we sort all of this out. And when we are talking about shareholders' rights, what exactly do we mean? We're talking about the legal that individuals or entities owning shares in companies have. Because we talked about this in previous editions, that trading in the capital market is not just about making money. You also have the opportunity to be involved in the running of the company that you have invested into. You can take certain decisions, you have certain rights, you have certain responsibilities. So today is the day we break all of that down. A good number of shareholders, they just invest, abandon, leave things to the asset manager, and they go on with their daily business. But it is not supposed to be like that. We are all supposed to contribute to the better management of a good number of the companies that we see today. Ahmed Jayola, to you, what does shareholders' rights means?
Okay, so it's outlined in most of the documents that you get when you buy shares. Okay, but a lot of people, like we know, don't read the fine print. So shareholders' rights is something that every shareholder has rights to. For example, you have rights to, sell your shares. You have rights to dividends. You have rights to, there are different rights. All of them are properly outlined in a document. And when you are talking about shareholders' rights, you are basically talking about defending the, should I call it, I don't want to call it integrity. It's not integrity because you are not profiling the shareholder, but you are much more talking about how to protect, that's the right word, the shareholder from the, possible issues that may be coming from the company, all right, that you're buying shares from, or from the regulatory bodies. So when the rights of the shareholder are clearly spelled out, it is the exposure of the shareholder to whatever it is that might be happening in the company. What are the things that what are the obligations of the company to the shareholder? Many of those things are outlined in most shareholder rights documentation.
Yes, I understand that in Nigeria we have the Companies and Allied Matters Act, the CAMA, to guide a good number of those things. But let's pick these things specifically now. Let's talk about the right to receive dividends. How exactly does this work in the capital market in Nigeria? When do you get your dividend? Where do you get your dividend? And in case there are any issues, who exactly do you go to? Through who do you get your dividend, and all of those things?
Okay, so most of the time you really don't have a direct, shall I say, interface to go and get your dividends. Okay, so when you have invested in the shares, most of the time the shares are invested through a broker. All right, and when shares are allocated to you, they are sent to you through mail, or in these days the e-version of communication. I've forgotten the name of the platform. So you are registered on that platform, and then you go there to go and check, okay, so do I have dividend, is there communication, and all those things. Now,
so the communication, I mean the mail now, whatever platform you're talking
yes.
about, how often do you get this information? Is it weekly? Is it monthly? Is it yearly?
Oh, no. So it depends on the kind of shares you purchased.
Okay.
All right. If you are, take for example, some time ago we talked about long-term shares. If you are a long-term share holder and maybe you have invested in for the long haul, every year you would get a dividend document. Okay? If in the case of some people, maybe you are maybe shall I call a short-term shareholder, all right? And the tenure of your shares is maybe like, and you have rights to get conversation or information from the company every month, all right? You will definitely get a document every month. So it's dependent on the kind of shares you have, and sometimes it's even dependent on the policy of the company, depending on what company determines, okay, so when do you talk to your shareholders, what do you say to them, and what is the regularity that you use to converse with them.
Thank you very much. I understand now that Professor David Adori is now joining us via Zoom. Good morning, welcome to Business Insights, Mr. Adori.
Very much.
Good morning. Can you hear me?
To be with you today, but please, permit me to greet our in-house analysts and also the viewers this morning.
Thank you very much.
Hear me clearly.
Yes, Professor David Adori is here with his over 30 years experience in the capital markets. And just before you joined in, we were talking about shareholders' rights. And Ahmed Jayola did well to explain to us what shareholders' rights to receive dividends are. And we talked about when you receive your dividend, where you receive your dividend, how you receive your dividend. But we also need to talk about the right to vote, which is a major shareholder's right. How exactly does this work in the capital market in Nigeria?
It's making noise.
Okay, thank you very much. I will start by stating that shareholders actually own every enterprise. And so they have voting rights as well as privileges, especially to vote in their general meetings according to their voting rights, because shares in enterprises are divided into classes. And so the voting rights are actually tied to the class of shares that the shareholder owns. And so if at any time a meeting is called for the shareholders who belong to a particular class of shareholding, then each shareholder has the right to vote according to the number of shares that he or she has.
Professor Adori, give us an example of the type of shares and the type of voting rights that accompany them.
Okay, so you can have within the sphere of the ordinary shares, you can have various classes like Class A, Class B, and Class C. And so Class A might just be one share, like a golden share that can have voting rights for about 60% of the rights of the enterprise, while Class B may not have that kind of right. And you can also have what we call preference shares, whereby the preference shareholder may not even have the voting right, but you will have preference in terms of the collection of dividends before any other shareholder. So accordingly, that is how the rights are subordinated. But however, for those shares that are publicly quoted in stock exchanges, they ought to have the same, they ought to belong to the same class, and any subsidiary share that is issued thereafter ought to rank pari passu with the rights and privileges tied to existing shares. So in which case, generally for the shares that are listed on the secondary market of stock exchanges, they are likely to carry equal voting rights.
Thank you.
So in which case, everything... Okay, I'm listening.
Yes, I just also want you to also talk about what they all actually really vote on. When you say right to vote, what are the key company decisions that they help the company to make? Is it only when it comes to mergers? Do they have the right to vote to change the company's constitution? You know, or do they have the right to vote during acquisitions? Let's talk about specifics here.
Okay, if you know the way enterprises or companies are organized, the ultimate authority in a company is the general meeting comprising of all the members of the company. They are the ultimate decision makers of the company. But the meetings are only held sporadically or periodically. So in which case, the powers of the general meeting are delegated to the directors or the board of directors of the enterprise. And so that makes the board of directors the policy-making organ of every enterprise. And so for policies to be formulated or enunciated, the directors will eventually have to vote as the case may be. But generally, if they have issues that border on formulation of policies, they are expected to put them together and present to the general meeting of members, who then vote to accept or reject or modify those decisions. So once those decisions are taken, they are expected to be implemented by the directors of the company board. But the board itself will not be involved in the day-to-day implementation of those policies. So they pass those policies to the management of the enterprise to implement on day-to-day basis. And so the voting.
Okay, thank you very much for that, Professor Adori. I thought you wanted to say something, but let me get to Ahmed Jayola, who is here. A good number of times when you attend annual general meetings for some of these big companies, you hardly find up to 30% of their shareholders at the meetings. And a good number of times when you look at that, you probably see elderly people, you know, people within certain age range. What do you think is responsible for that? And what is the effect of that on the day-to-day running of that business and its ability to make profits?
Okay. I personally think many of the companies, or shall I say shareholders, let me not go from company end, let me go from shareholder end. Most of the shareholders are not even informed about their rights.
Well, you did say it earlier that they have a document that states their rights.
But most of them don't go through the fine print. Nobody sits them down to explain to them, this is what you have in your document. So most of the time when they invite you to maybe an AGM or to some meeting, most shareholders just, go their way, not knowing that they have rights to decide, okay, you know what, this person that is running this company is not running it properly. Time for you to go. And they will vote, and they will remove the person. They don't know they have those rights. They don't know they have the right to say, okay, so this company said that they want to take this decision. I am not with it. No, you can't do that decision. They don't know they have those rights. So this is a misinformation, or shall I say this is lack of information, not misinformation now. They are not well informed as to their rights as shareholders. They are not well informed as to what they are actually going to be doing in that general meeting. And if I don't know what I'm coming there to do, why should I be there? Just give me my share, let me go.
Professor Adori, do you agree with him on this?
Yeah, he's quite correct. But first, let me react to what you said in terms of the number of shareholders who normally attend general meetings, that there are very few. The issue is not really in the number of attendants, but actually the voting rights of each person who attends. So you can actually have an AGM with very few people, but one or two of the people are majority shareholders. They probably own up to about 60–70% of the outstanding shares of the enterprise.
Interesting.
And so such, if you have such people, maybe one or two, their decisions will supersede the comments or the say of the numerous others, elderly people and so on, who are minority shareholders, who may come to perhaps make some suggestions as to how the business can move forward, but not really to impact on the policies of the enterprise. Then secondly, like our in-house analyst has said, concerning the activities of shareholders, that they are usually born out of ignorance, that a lot of them are not properly informed about their rights. He is quite correct, and that is the essence of the public enlightenment that we are undertaking here now, and which the stakeholders in the capital market do from time to time, like Souq, the securities exchanges, and capital market operators, to really break down to the investors or shareholders the kinds of rights and privileges that are tied to their investments, so that they do not slip over their rights. But we are happy that a lot of them are taking up the initiatives, and that's why we have a lot of the shareholder associations that have their shareholders as members, and they enlighten them about their rights. And then when those rights are trampled upon, they, as groups, are able to defend those rights, especially through class actions.
Thank you very much,
So the rights and
Professor
privileges
Adere.
are many.
Yes, thank you very much. Because I've also heard a situation, not in Nigeria though, where some shareholders tell the other shareholders who could make it to the annual general meetings to vote on their behalf. Is that something that can work here in Nigeria?
Okay, is that question to me?
Yes, yes,
Awe?
yes, sir.
Okay, yeah, so that is what we call the proxy. If you are a shareholder, you have a right to delegate your voting power to a proxy. That is to a third party, to another person who you have appointed through an instrument to represent you at the general meeting to vote on your behalf. And any vote cast by your representative is expected to count towards the final decisions that are taken at such meetings. So that is what we call proxy. So if there is a circular calling a meeting, general meeting for shareholders of a company, that circular is always accompanied by the proxy form, which the shareholder is expected to fill and sign and give to his representative. For the individual investor, of course, there might be no need for a proxy to represent you if you are going to be there in person. But for enterprises, you also have corporate or institutional shareholders. So the entire institution may not be able to attend. So such an institutional investor or shareholder will delegate the authority via proxy to one or two of his staff to go to the AGM to attend and vote on his behalf.
Thank you,
So
thank you, Professor Adore.
It goes.
Thank you. Now back to you, Ahmed Jayola. Let's also talk about right to information. You know, the financial reports at the end of the year and the other information given at the annual general meeting, are those the only information that shareholders have a right to?
Oh, no. So, like I had said, the general meeting is more of an information carrying along meeting, if I may put it that way, where there are different decisions that the company is making, there are different things that they are announcing, and so on and so forth, that you as a shareholder are supposed to know. Sometimes they do share minutes of these meetings, but in most cases, the most common documents that the shareholders get are usually the share documents. when you have your dividends and all that. But most of the meeting, what do you call it, conversation in the general meeting is usually communicated through either the handouts that they give in the meetings or some form of other instrument. Now, every shareholder, like Prof has rightly said, every shareholder is a part owner of the company. So the shareholder has a right to know every single thing that is going on with the company, if the person is interested in knowing.
So if you attend a meeting, for example, because I understand that shareholders have the right to attend meetings, are you free to raise your hand and ask questions, even if the question you have in mind has not been covered in the documents or the information that has been given to you?
So that's the point of me having a share. I can raise my hand. Hello, I have something to say. And they must listen to me. I am what do you call it? I'm an owner, right? I have to be able to express myself and say, okay, you know what? I have something to say, and they must hear my contribution.
Yes, thank you very much. Professor Adori, I think I must come back to you now on the right to vote, which was the last thing we talked about. Let's talk about e-voting. You talked about voting by proxy, but let's talk about e-voting. Is this something that companies are willing to embrace in Nigeria? Is it a better alternative in the capital markets?
Well, is probably not something that is encoded in the law or the rules and regulations guiding the activities surrounding the general meetings. But the exigencies of time have imposed it on the system to probably move towards the direction of e-voting. You know, when COVID ravaged the entire system, people could not really assemble to discuss meetings. So all meetings were held online, especially AGMs. And I think that practice is still continuing. And so with the possibilities that digitization has brought to the system, to the economy, and to the financial system in particular, I think e-voting has become the reality. And so a lot of AGMs that are conducted online, the voting patterns are conducted also electronically through e-voting. So it's something that reality has imposed on us now. But however, now that the economy has been reopened and everything has been normalized, a lot of investors or shareholders have clamored for the return to the old brick and mortar system of physical AGMs, so that the normal interactions can occur and in-person voting can take place during the meetings.
Thank you very much, Professor Adori.
Kinds of relationships that the physical meetings bring.
Thank you very much. I mentioned earlier that we're going to take a question, from someone that has invested in the capital markets here in Nigeria. Hopefully, we'll be able to get some insights from you experts. We will continue the conversation on the shareholders' rights and company action tomorrow, because there are more rights to sue, there are other rights that shareholders have, right to appoint directors and so on and so forth. We focus on that tomorrow, but let's quickly take this question. It's very important. This person sent us a message and said, I spent 130,000 naira to buy shares in 4 Nigerian companies between 2005 and 2009. And he mentioned the companies and said none of the companies yielded anything to me in terms of dividends. Since 2017, they all stopped sending to me dividend warrants, their annual report and accounts, or any other correspondence mentioning e-dividend. Even my biological father that started e-dividend account with one of the banks in Niwi, in regard to his 13,760 shares in another company or in the company, is not receiving anything from the company. I want the gain from my financial investment through shares in the 4 companies, and I prefer dividend warrant method to e-dividend that has never worked. And he mentioned his name, mentioned his location, and all of that. What advice would you give to this person? Let's start with you, Professor Adore.
Thank you very much. But please let me assure that shareholder that the capital market is built on trust and integrity. And so no aspect of his investment will be lost in the capital market, because all instruments or securities that are traded or issued in the capital market are registered instruments. They are different from bearer instruments that can be lost easily. So since those instruments have been registered in his name, let me assure him that if he follows the procedures, he will cover all his entitlements.
What exactly is the procedure here? What is the procedure here, Professor Adore?
Yes, I will just run through that very briefly. This is what happened. Before that time, before the 2017, after the investment he did, of course, dividends were posted via warrants. What we call dividend warrants, they are like checks posted to the official addresses from the investors through the post office. And so a lot of those dividend warrants got missing or they were stolen. And so the Securities and Exchange Commission came up with a plan, which was encapsulated in its 10-year master plan, to move away from the physical method of distribution of dividends and also bonus shares to investors, to now doing that through electronic means. So that was the essence of the dematerialization of shareholdings, together with the emergence of e-dividends. So what the investor needed to do was, well, as of now, since the system is completely automated, the investor needs to just go to the website of the registrar involved and download the e-dividend forms. Okay. Fill the e-dividend forms and put the necessary details on the form, and accompany the form with the necessary documents, and take the documents to his banker, to the branch of his bank, and submit it to his bank. So the bank will process it and in turn send it to the registrar, and that will enable the registrar convert the account from a physical account to the e-dividend account. The manual treating of dividends has been prohibited. So no registrar will issue any dividend warrant again. It's been prohibited, together with any physical share certificate. Everything is now dematerialized and based on e-dividend. So if the investor can carefully and patiently follow this procedure, I can assure the investor that all the outstanding dividends will be aggregated and paid into his bank account directly.
Thank you very much.
So everything has been made quite efficient.
Thank you very much, Professor David Adore. Amejayola, do you have any other thing to add to that?
Well, not so much. He has said everything. We are in a digital age. The days where we used to push pen to paper or push paper to deliver financial information is gone. Let me put it that way. Let me not say going. I wanted to say going, but it's gone, because you can't trace a lot of these things. And because you can't trace them, instruments need to be put in place to be able to, track where all these things are going, if they're going to the right person, if the person that is getting to is the correct person. because this is dividends. This is not, it's not a joke, right? So he has said the right thing. If the person goes through the right process patiently, and the person has put, if you have the document, proper documentation showing that you actually have these shares, and you have the rights to those shares, and you fill the appropriate sections of the form patiently, both you and your dad, whether 13,000 shares, whatever it is that you're talking about, fill in the information that is required, let it be sent to the appropriate quarters, and it will be done.
Well, thank you very much, Professor David Adori, for your time on Business Insight today. We now have to wrap things up. We appreciate your all the information that you have dished out on the program today. Thank you.
It's a pleasure. Thank you. Always happy being with you.
Thank you. And as we wrap things up, this tip you gave, does it also apply to people who have invested in the stock markets and abandoned their investment for a long time? Because if you ask some people, they'll tell you, oh, I bought this number of shares with this company some 5 years ago. They were running at a loss, or I didn't even get any information again, so I just left it there. So for people like that, if they want to, go back to those shares to see what they now have, what's the process of doing that?
Do you have the right documentation? That's the first question. If you have the right documentation and you can still trace whoever it is that helped you get it, or you can, get the right documentation to stockbrokers, or like he mentioned, you can reach out to maybe your banker, who, if they have an advisory that is there, you can go there. You have your documentation, present your documentation, and you can onboard on the digital platforms to be able to, and be careful, because there are some, communiques that may have, some, by some form of action, maybe a letter has been sent to you that because of this, and maybe an inaction, or maybe a company has said certain things, your shares are not valid, or something of that nature. You need to be sure that you don't have a lot of this communication. However, the challenge is not so much. The challenge is mostly, do you have a document to prove that you have these shares? Walk up to the broker or your banker or whoever it is that you find authorized, okay? And then they would assist you in what you have to do.
Yes, thank you very much, Ahmed Jayola. Because we are doing the basics of the basics, tomorrow we'll talk about the documents you even need to have to show that you have shares with a particular company, and some other issues that we said we'll trash out on the capital markets in Nigeria. And that's the program for today. I am Olaoluwa Awe. Thank you all for watching. Tomorrow is another time on Souq News. Don't miss it.